What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So we have a lot to cover in this video. Again, a lot of important things happening with AMC and the broad market. We have the utilization continuously going up. On Monday, I am expecting the utilization to actually come down a little bit for a specific reason, but the fact that the utilization has continuously gone up over the last couple of trading days and weeks, and we have also seen the short interest go up, it just leads me to a higher conviction on AMC. Now, in addition to this, we also have Citadel potentially losing $150 billion over the last quarter. A lot of people are naming Citadel as the big bad guy in this situation, so I know a lot of you guys are going to be very happy that Citadel has taken this big loss, but we're going to go over this situation and just go over exactly how valid these claims may be. Now, in addition to this, we also have what I am going to be calling basically a massive market margin call. We have the Fed basically releasing their stress test results and what they need all of the large banks to start doing. The amount of money that all of these banks need to keep on hand now is absolutely insane. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording this video, AMC is trading at $32.10, right around that range. We've seen a decently volatile day today, and we've gone over why we could see volatile AMC days in the past due to the option chain, but a lot of people were really hoping for a big day today based on that T+35 FTD day. Now, we went over this in my live stream last night, but in my opinion, they closed out a lot of the failure to delivers yesterday when we saw that major price run up. So when everybody was expecting today to be the big green day, it's like another one of those situations where the ape community gets hyped up around a certain date and nothing ends up really happening. So when we come over to Ortex, utilization at 92.39%. As the utilization goes up, we've gone over this a lot, but it leads the way for another what we call a forced share recall. It then becomes very risky for a lot of these institutions to have all of these shares out on loan. So they force their clients to essentially close out a lot of their short positions, return the shares, and then the institutions who are loaning out these shares may re-loan out these shares at a higher cost to borrow rate. Now, we aren't necessarily at the utilization levels where we could be expected to see these forced share recalls really come into effect, but we are getting close. Now, the reason why I am expecting the utilization to come down on Monday and then come back up on Tuesday is due to the price action that we've seen on AMC. When we come over to this 5-day chart, we can see that AMC had a pretty significant down day 2 days ago, and due to that T+2 delivery or settlement period, we are seeing the returned shares and the borrowed shares come in today for 2 days ago. Now, yesterday we did see a pretty significant green day, so it is possible that more shares were returned and that could affect the utilization. But again, short interest continuously going up. We are at 16.1%, and again, these shorts have not covered. Now, again, I encourage you guys to go and vote on this save voting platform. We are getting towards these more statistically significant levels, and this is probably the only way that we are ever going to be able to do any statistical analysis to have a concrete understanding or estimate of how many shares could potentially be out there at any given time. Now, when we come over to the Citadel situation, this is what a lot of people have been talking about. So Citadel Advisors is based out of Chicago and is run by Kenneth Griffin. Citadel Advisors is a hedge fund with 17 clients and discretionary assets under management, AUM of $244 billion. Their last reported 13F for Q1 2021 included $407 billion in managed 13F securities and a top 10 holdings concentration of 28.09%. So this is where people are getting the $150 billion loss from. Now, when you look at the overall market, there has been some volatility over the last couple of months. And if Citadel is actually the main culprit in this short squeeze situation, and they are the ones who have over leveraged themselves on this AMC short, then yeah, it would make sense that they were taking that $150 billion paper loss. But what I really want to bring your guys' attention to is the fine print on what is disclosed on these Fintel filings. Actual assets under management, AUM, is this value plus cash, which in parentheses, which is not disclosed. So here's what we're looking at. Fintel has not necessarily updated their site yet, but the $407 billion is most likely not the actual assets under management. There's a cash component of this involved. Now, if Citadel ended up selling off a lot of their assets and liquidating their positions in order to position themselves for the potential market event that we all see coming, similar to what Goldman Sachs has done, only the assets that they are currently holding would show, and it would not show the cash value. So yes, it is possible that Citadel has taken a significant loss, but we're never really going to know for sure. This is why I've been pushing for market transparency. We actually don't know what the total size of Citadel's fund really is at the current time, and we also don't know what their short positions are. If you look at 13F filings and how the SEC designates how they're supposed to be reported, you do not have to report short positions. Now, let's get into this major market margin call situation. There's a development happening with the Fed and their stress test that they run on all of the major banking institutions, and there's an update that you guys all need to know about. When we come over here, on August 5th, 2021, the Federal Reserve Board announces the individual capital requirements for all large banks effective on October 1st. Now, October is also the date that a lot of people think that the debt ceiling situation is really going to come to fruition, and that is when we can see the defaults. So there is a little bit of a timing aspect here, but as we see when a little bit later in this video, when we talk about the previous Federal Reserve Board announcing the individual capital requirements, October 1st is typically the date that these requirements come into effect. So let's take a look at this. Following its stress test earlier this year, the Federal Reserve Board on Thursday announced the individual capital requirements for all large banks effective October 1st. Those capital requirements ensure that the large banks tested will hold $1 trillion in high-quality capital, enough to survive a severe recession and still able to lend to households and businesses. This is a very, very important development. The fact that the Fed is coming out and saying that all of these banks need to be holding a significant amount of capital in order to withstand a severe recession taking effect on October 1st just plays into everything that we have been saying about the market is over leveraged. We know a lot of these institutions are liquidating their positions and repositioning themselves for a potential major market event occurring. And the Fed coming out and saying this is essentially proving a lot of our theories, but we are not correct yet until this situation plays out. Now let's take a look at this press release from last year. So we can see August 5th, 2021 here. When we come over to this one, August 10th, 2020, the Federal Reserve Board announces individual large bank capital requirements, which will be effective on October 1st, which is what we saw in that previous one. Now, nowhere in here does it say that any of these large institutions have to hold a certain amount of capital in order to survive a very, very significant recession. This is where this development really gets interesting when we come over to what we've seen yesterday with the derivative exposure of all of these large banks. So we can see that the top four commercial banks are essentially holding $168 trillion in derivative exposure. Now, we've seen Bank of America listed here, and we also know that Bank of America has filed this shelf registration for $123 billion in debt and equity securities over time. Most likely what is happening here is Bank of America realizes that they're not going to have enough capital to maintain the capital requirements that the Fed has then set out for them. This is a very interesting development in that Bank of America could really be in trouble coming up over the next couple of months. So we will see what happens when all of this plays out. But again, in short, we have Citadel potentially losing $150 billion on their positions, or that could be them just selling off, liquidating their positions, repositioning themselves, and that difference is actually a cash value. Now, the second is that major margin call that is essentially being issued by the Fed to the major banks in order for them to get up to that $1 trillion requirement. So we have a big situation coming up. Again, I hope you guys are excited as I am because this is going to get very interesting. We have AMC earnings coming up on Monday, and I will keep you guys updated on everything going on with AMC, the market, and how everything plays in together. So that is going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video so you get to stay up to date on all of your favorite stocks learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.